Hello everyone. As per usual, I'm going to take a couple minutes to share the links out here. We'll get started. I hope you're all having a wonderful week. I'm going to share some of my thoughts on the charts locally and high time frame. All right, I got the link shared out on Twitter and Discord. Let's give everyone a couple minutes to get in here, and I'll start chatting about my thoughts. Looking at a few different scenarios here. Of course, we could just carry through the all-time highs today. I think there's some ideas to watch out for. We are flirting with some local resistance here. Also could push up a little higher, 786 range. Maybe look for a local high to come in. But overall, I'm quite bullish. I think the question, the most reasonable question is, where are the best places to add to longs? And so that's where a lot of my energy is going to be spent on Bitcoin in the coming days, as we work our way towards 77K. And the reason I wouldn't just personally be longing at any given point on the chart is because there's two things. There's always a chance you're quote unquote wrong, and you really want to use asymmetric risk reward setups and being patient for retracements into support when you have an overall bullish thesis. It's really important. And so I'm in some beautiful longs. I assume most of you follow me on Twitter relatively closely. But all the way from back here, just been taking swing longs and retracements. I had a lot of this price action dialed in. And I'll just say that my thesis from down here is to break through all-time highs. But that being said, I even shorted this, right? If you follow me on Twitter, you'll understand from down here, I had the thesis of pushing up through these highs. We had this descending trend line that I thought could wreck people. I did add back into my longs down in these lows, and we did come a little lower than I had initially kind of planned out, I guess. And what my plan looked like was something like this, right? Let me actually remove this. So I had the price action pretty much dialed in from the lows, which was come up, take these highs, front run this trend line, have it just a local retracement, break out, trap all these breakout traders, take the liquidity above this trend line, but really just come maybe wick this candle here and retrace back into this low. So all of this looked quite good, obviously. So I took that long trigger. We did come and have this liquidity grab at yesterday's New York Open, and I stayed long because this didn't invalidate my thesis at all. And it is funny because, you know, for example, if I long here, the moment price broke down here, I got like somebody quoting like, I'm going to screenshot that you were bullish here. Like, people wait until you can be right about every single pivot. The moment price ticks 0.5% above or below your entry, you got the people coming in, I told you. But anyway, so let's kind of go over my thoughts locally here. I'm taking it a little slow at the start just to give people a chance to get in to the live stream, the members in the Discord and people on Twitter. So yesterday, as price came lower, I said price at the major GP of the move. And the reason I'm giving updates here in the Discord is because I was long from this retest, right? I mean, that was my initial plan. And I had even talked about when I was longing that I would be watching this level, but I was willing to long up higher. I said, price at major GP of the move, that's the 618, need to watch for this to become a liquidity grab and a spring. Breakdown possible, but doesn't invalidate bullish ideas at all. That's a bit of a typo, I meant to say, but this doesn't invalidate bullish ideas at all, just coming down and running these lows. I said, not about never being wrong, but need to stay objective here. Risk management, being open to lower, but need to look for signs of a reversal, and this being a stop run. Very important level here, though, for sure. So what I'm saying is, yes, it's such an important idea that, yes, I was looking to long here, but I'm just trying to stay objective. I'm not trying to be right 100% of the time, but does price running these lows into the New York Open invalidate the bullish thesis? Not at all. I mean, I don't even see how you could possibly argue that prices come down a little lower than maybe you quote unquote planned. And then I just made the point because somebody had commented the other day. This is all important. This is going to give some perspective here. Someone had commented in the Discord as price came down to the initial level. Anyone else massively over leveraged? And I said, not going to tell anyone what they can or can't do, but this doesn't end well. It's just a trade like any other. Might work, might not. There will be plenty of opportunities to add. No sense in taking on way too much risk. And why that's so important is because let's just say, I don't know how over leveraged they were, but you just are so confident that this low is going to hold and you take a massive loss here. You're also going to be induced by fear. Even if you're not going to get liquidated, you're probably more likely to close as price comes a little lower. Just pointing out that prices come a little lower, but use some risk management. Don't put way too much risk in the market, and now you're just in a good position. You can just make a reasonable decision. So I said that, hey, this is important. A big breakdown is possible. I'm not saying it isn't, but as long as price is holding up these lows, and this is a major technical retracement, I'm not going to turn bearish. Does it make any sense to turn my whole thesis bearish because prices come a little lower? No. I said the most likely scenario for me is that I'm still long into the New York Open. Maybe a new setup, maybe a new entry, seeing how things play out here. But again, I'm not going to get obliterated if price breaks down. I'm going to be using a stop loss, and my size is still reasonable. So I just said, can't justify closing a swing long right at the 618 at the New York Open. So may take a stop and reopen it if we sweep and reclaim those lows below us, or be completely out if we break down. And then, all right, looks like I made a good decision, blah, blah, blah. One other thing I'm going to note here is that ETH was coming into a really technical level at the same time. So before the sweep of the lows on Bitcoin, I just updated. I was looking at the ETH chart. This is the 4-hour chart. I'd be interested if price could come retest this trend line. You had front run. This is just such a nice, clean local setup for a spring. It had front run this 618 earlier, retest the trend line, the 618, take these 4-hour lows. And so I couldn't help but notice this setup, which obviously would infer that Bitcoin could run the lows as well when I was looking at this for me to get this setup. So this is just for perspective, and hopefully as I work through what my thoughts were yesterday, this could help you guys with some of your future decision making. I said ETH would be quite clean here. So I'm giving these updates at the same time, right? So this is 7:41 a.m. on ETH. And when Bitcoin is taking these lows and testing these lows, this is all the same time. 7:51, 7:24. This is right at the New York Open. So this is at the low of Bitcoin, the low of ETH. So that's why I'm referring to Bitcoin in this ETH update. I said ETH would be quite clean here. Remember, Bitcoin and ETH are at their GPs. That's their 618 retracement. Golden pockets, it stands for. And testing structural support still. I have no reason to shift my whole perspective bearish because prices come a little lower. And I'm talking about my swing positions from lower, right? But I do need to be open to the reality that price can just keep breaking down and be trading much lower today. So earlier, about 2 or 3 hours before, taking a long on ETH if we get this, preparing to take the long, reminding people that we are just at support on ETH and Bitcoin. There's no reason to get super bearish here. And then I took the long trigger on ETH, always using risk management. So that's how I navigated yesterday. This is, of course, we're going to look at some of this price action. This is the 618 I'm referring to on Bitcoin. It's a key technical level right into the New York Open. Can be an important time for pivot lows and pivot highs to come in. And this was the idea on ETH, right? Again, you have to be cautious here, but you just use risk management, you use a stop loss. Coming down on the 4-hour chart here, running that liquidity after a little bit of ranging for spring, testing the middle of a bigger range here. All right, so I'm going to talk about what I'm looking at here. There's a couple scenarios, and what I'm going to do is I'm going to keep things relatively simple, I think. And I'm looking at two ideas. One is that the low is in, and we start making our way to new highs, maybe a sweep of the all-time high, and come and retest this level. But what I'm personally going to be doing is trading around these simple horizontal structures. Kind of look at this as like a range within a range. But I might delete this range for now. I don't dislike the idea of price coming down and testing this level several times. I don't dislike the idea of people getting bullish before an all-time high breakout, only to have us reject back into these lows. Strong move, wick through the all-time highs. People get really bullish, only to have us reject back to the range lows for eventually a bigger move to the all-time highs. So how I'm going to be trading this is essentially every time price comes and retests these lows, I want to notice there's a big point of control here as well with our 618. Every time price comes and retests, maybe wicks these lows, this is a long setup for me until this level breaks down. So this is the relevant structure that I'm going to be willing to long essentially every single time price comes down here, targeting towards all-time highs. That might not come again. That might come 2 more times or 3 more times. Who knows? I'm also going to be open to shorting these highs. And for me, those will be hedge shorts. So I have longs running. I've added to my longs. For the same reason that I shorted here the other day, I'm perfectly fine to take a stop loss. These simple horizontal structures, invalidation could be just all-time highs pretty close there. And so I'm going to continue to hedge short failed breaks into all-time highs. This is a bit of a region and could even wick through the all-time highs, and the short still maybe needs to be considered. And I'm cutting my shorts on breakouts. So when I take my shorts, I'm not closing my longs. I'm hedging out a very small area of the chart with the idea that people might get chopped up here. Now, depending on how order flow and structure progresses towards these highs, I may change that thesis, but for now, I like it. You know, I even like the idea of maybe coming down and just running some of this liquidity for this next move up, just locally. Maybe retest these previous highs, this point of control. We have, you know, just simple fib retracements in this region as well. And there's some horizontals here. But it's like you can only have so many levels on your chart, right? At some point, clean it up a little bit. So I might even be interested in scalping into this retracement for a move up into these highs. But that's my perspective here. I mean, I think, you know, I quote unquote preach this all the time. Not that you can't breakout trade. If you're a breakout trader, you need to have a system. You need to understand your invalidation, your triggers, the asymmetric risk reward. I'm not saying there's anything wrong with being a breakout trader, but just trading a long every time price goes up or a short every time price goes down is not breakout trading, right? That's just FOMO trading. And so for me, it's the same reason why, even though I was bullish down here, bullish for all-time highs, I'm still shorting this because I have nice asymmetric risk reward. It's a nice hedge. And I'm looking to long support and retracements and not being reactive with no plan to price, but planning ahead. And so personally, I wouldn't long here. Doesn't mean price can't go up higher. It's just, in my view, a poorly structured long trade. I would wait for, if I get the chance, retracements. Okay, let me just read through the comments really quick. I haven't done that yet. Someone says, yes, absolutely, nailed every turn, gratitude. Yeah, I've been pretty dialed in. I still feel pretty dialed in. But let's see what happens. Anything's possible. Gerard says he's a long-term member of the Discord, watching the stream at the office on mute, but I think I get a good sense of what he is talking about. Yeah, he could do this in his sleep. The sheeples, classic signs. I'm just reading comments. We eating steak tonight, boys. That's Man Steve, another long-term member in the Discord. Love X Luck, another member of the Discord, just saying, good morning, why you wake me up at 2 a.m. I'm sorry. Someone says, was lovely. I took ETH at the same time. Love being in sync. Anyone that is not a member should really consider it. Yeah, I mean, obviously, there's tons. It's not going to be for everyone, but so many positive stories out of the Discord over the years, and a lot of people just saying, hey, I followed you for a long time, for years. I finally decided to try the Discord for 1 month, and I can't believe I didn't do it sooner. And it's just, there's so much value in there for, especially, I mean, I would just say for all levels of traders, it's just a no-brainer in my view. But again, you know, it's not for everyone, certainly, but overwhelmingly positive feedback from all levels of traders. Yeah, I don't look at fair value gaps. Somebody's asking me any takes on fair value gaps. You know, one thing is, I don't really like to. I analyze the market. I analyze it how I analyze it. I use the ideas and tools that I think are, I guess you could say, the best. I mean, I use them because I think they're reliable, and it's, you know, a mishmash of a lot of things, I suppose. But I don't like to bash typically what other people do, like different styles, because there's not only one way to approach the market and to approach trading. And so, yeah, I don't use fair value gaps, but to each their own. Everyone's on their own journey, I guess. Someone's asking, will you take a look at alts or only focus Bitcoin here? Well, of course, Bitcoin certainly is an important, for example, like, is it any coincidence that the low on Bitcoin came in at the same time as the low on ETH, right? Is it any coincidence that the high on ETH came in at the same time as the high on Bitcoin? Generally speaking, alts, especially for pivots, maybe not the internal structure of price, but when Bitcoin's coming into a key low and has there's some ideas for a move up, most alts are going to be pivoting around that same time, and vice versa, right? So there's a case to be made that whether you're trading alts specifically or Bitcoin at all, that being aware of the key ideas in Bitcoin is incredibly important for a lot of alts. So I'll just say that really quickly. The other thing is, man, I can't help but everyone has their own perspective. The Bitcoin dominance here, it just looks so bullish to me here. But we're still at resistance, so you know we need to break out. But I wouldn't be surprised to see Bitcoin start outperforming many alts, the majority of alts. If we can break out of here, there's no structure in this zone of price. And so, you know, this is to me just kind of grindy, rounded price action, preparing for an impulse. So I'm also interested in Bitcoin because I think it's going to I think there's a reasonable chance it starts outperforming a lot of alts. Will FET go back up with BTC? Yeah, I did have a FET long idea as well yesterday. Obviously, FET's been quite weak from some major resistance up above. I kind of like the idea of FET rallying into this high here. I've been ranging, came down and tapped the 786, and retesting this high is my next idea. It may be a surprise to some of you that don't follow me. I'm actually, my view on FET is more bearish on the higher time frames. So we're in a range. There's no reason to get too bearish, but I think we're testing some critical ideas and we could break out. But something like this would obviously shock a lot of people if FET went down to $1.40. I'm open to that. I was looking for short FETs up here, and I was looking for FET shorts, and I was looking for longs down here, looking for these highs to get taken. Price pushed up a little higher than I'd planned, more around like $3.30. But we did have some pretty clean technical price action up here in the end, which is we had this nice high come in, about 14% rejection. Price pushed up, took the high, rejected, and then rejected on the retest, which was also the 618 of the local move. So very nice technical retest into this bigger rejection, and now just ranging. So I just say this is a range. You could draw this out like this, but you know what? I would just say that I don't have a higher time frame bullish thesis on here for FET until we break out of this structure, and I think it's actually, in my view, a little more likely that we don't. But that wouldn't stop me from taking longs. And you know, the way I would approach things if I wanted to have some long exposure is I would take longs within the technical support of this range, wait for clean ideas, and then I take some profits off of it, and then leave some running, and maybe add on another retracement, just use invalidation. You can still take a long with a bearish thesis, just long support with invalidation. And that's my view on FET. Someone's asking, hey, Lucky, will you do altcoin analysis live streams again in the future? Learned a lot from watching those vids from years ago. You convey your thoughts amazingly. Yeah, I used to do that a little bit more. I would do like 15, 20 alts in a live stream, and usually requests. But yeah, I don't know. Something I've been enjoying, I've been doing more live streams, is just popping on to live and sharing some of my thoughts, and just a chill live stream. You know, for me in the mornings, kind of nice. I take a few hours to deal with some of the things I need to deal with every morning I wake up. Always lots going on. Kind of think about local price action and what's happening, get my bearings, and then just hop on live stream for an hour and chat a little bit about what I'm looking at. And I think, so basically the point is I would do those, but there's a big difference between me chatting about the things that I'm doing, I'm looking at, and then, or taking hours just taking altcoin requests all day. And I'm not as interested in doing that. So a few more comments coming in, but I do think there's actually probably a lower time frame long that I'm going to be looking at taking here. Maybe we even come down into the 618. and take these lows. So there's a region here. Into the New York Open would be kind of nice. There's also some very bullish ideas, I think, on Bitcoin, by the way. You know, I've been talking about this 77K level, and I think it's super important. It's this region of price. We're going to look at order flow a little bit as well, I guess. I think this is a bit of a region for longs, but this could get quite bullish. And the dynamic, like this will sound kind of like a crazy, and I shared this, I retweeted it on Twitter, X-Force Global's, his account, price going much higher. And I actually don't think it's that unreasonable to think that if we hold a breakout here and we start breaking out of this region, that we could be looking at a 200K plus push. And you know, if I think about like the dynamics of order flow and maybe what the psychology of a push like that might be, is although people would constantly be claiming how bullish they are up at all-time highs, a lot of people will be selling and even shorting, thinking, oh, I mean, because everybody, it's funny because everybody will say things like, yes, Bitcoin's bullish, but everyone's so bullish, price is going to go down. But whenever people start saying that, order flow oftentimes will reflect that people clearly aren't bullish because they're aggressively selling and shorting into every move, and they might think everyone's going to get wrecked, and you know, they might even just be looking for something like this, and so they're shorting, price goes higher, it chops around a bit, they short, and this can happen where there's no retracements and price just goes, and then people stop shorting and they're waiting for longs, and price just moves through this territory of all-time highs very quickly, and no one's long because everyone thinks it's impossible, that even the most bullish bulls, from a trader's perspective, think it's impossible that price will just keep going up. And so I'm actually open to that, and we'll look at some of the order flow thoughts there, which I did cover briefly on the last live stream. But what I covered on the last live stream was this: I don't like to prioritize high time frame order flow in terms of, because it's really hard to use for entry ideas. Like, you still need to get into the local price action for, you know, entry, invalidation for your setups, targets, all that stuff. But you can't help but notice, similar to and this took way longer to produce, but this is just on Bybit, by the way, but similar to this range between 35K, it was actually an uptrend, it wasn't even a range, 35K uptrend to this low at 38K. We had a 664 million negative delta divergence between price and CBD, and we actually have just as large of a divergence in terms of delta here between our 50K low. This is annoying me because this is not the button I'm clicking, but it keeps pulling up that. So we can pull up some of the data on this. Let's get rid of this. And so even throughout this price action, so let's just think about a couple things. I've been looking at this huge divergence forming. I mean, at the lows from 50K, it approached 700 million CVD. So let's just think about this: price consolidating, ranging, bullish absorption, big move to the upside. Really aggressive selling coming in here over this range from our all-time high. Price just ranging, making new higher lows. This actually infers to me that a much bigger move to the upside is in the making. So, yeah, I mean, we'll see these bullish divergences obviously form on all time frames. I oftentimes am using them on the lower time frames for entry ideas, where price is ranging. Big bullish divergence in this range. I talk about them often. Big bullish divergence in this local range before the move up. But if order flow were fractal, you could just say it's just bullish divergence into bullish divergence, and that just means aggressive selling getting absorbed, aggressive shorting getting absorbed. And why not be open to a much bigger move through all-time highs? So I am. And obviously this was a big bullish divergence at this low at 64, 65K between these lows. So looks all bullish to me from an order flow perspective, and it actually looks very bullish. Someone's saying, what are my thoughts on ICT, smart money concepts? Yeah, like I said, I mean, I don't use, there are overlaps, right? There's overlaps between a lot of these ideas and systems where oftentimes there's alignment in terms of levels and some of the concepts, but I don't like to bash all that stuff, but yeah, I kind of have my own, a different style personally. But yeah, I'd say locally we're at some maybe local resistance. You could call this the 618. This was actually a level I was interested in shorting yesterday before this move to the downside, which was come up and take these highs. But it looks a little less appealing off of this, just as a scalp short. Be more interested in the long. Yeah, ETH at the middle of the range, and would be surprised to get a retracement here towards the New York Open. 618, middle of the range, important local resistance. But I'm going to be trading towards the higher time frame ideas over the coming days, and always using risk management. But again, like all the longs that I was taking down here on retracements, like I did take this long as well, and I was adding to longs from lower, which were also adds from longs from lower. At some point, if you want to hold a swing position or build a swing position, you have to accept that there's going to be retracements, and you can protect yourself with invalidation stop losses, and also by longing support, right? So I'm not wanting to long up on these impulses to the upside. I'm wanting to build my longs down at support. Love X Luck says, Russell, I use ICT and Lucky's methods, and the combo is deadly. Oh, there you go. A little tough. Marius Z says, good morning, Lucky. Can you explain how to place the right stop loss? Had yesterday on my long, the stop loss at 67,500, got hunted. A little tough on this one because you almost have two levels. You have holding this range, and this was also an ascending trend line. We had both a clean ascending trend line here, and we also had locally a descending trend line that actually held very cleanly for the move down. So I could actually align this a little bit better because it was a little cleaner than that. But the point being that, I mean, you could place your stop loss under these lows. I think these lows could have got run just as easily. There's just going to be a reality where you could run it wider and then trade the position smaller to maintain your risk management. But this is a little tough because it's just you have a level and you have a level. And I would say that, I guess, like I said here, it also depends how much time you spend on the chart. and if you're ever going to be able to consider reopening a position that you've been stopped out on. But I said here, I can't justify closing swing longs right into the 618 at the New York Open. So it may take a stop and reopen if we sweep these lows. And so for me, I would be looking for these lows to break down, and I might just have to close my long there because price could just continue breaking down and reopen if we reclaim it. And just watching this key idea. So I would say that placing a stop on this, I mean, some of it could be considered hindsight, but not wanting to get stopped out right at the 618 of the move is probably it's probably an important idea. Like if you say you're a swing trader and you're on the charts 1 hour a day and you're in this with a limit order, not placing the stop right at the 618, especially if you don't have any way of managing that trade at all, just from a availability, trade it wider. How do you overlay CVD on the EXO chart? It actually doesn't let me show the settings for some reason on the live stream. I think it's just the way it integrates with EXO, but you just go to settings and there's a setting there where you can overlay. I think this toggle is called CVD. I'll just pull it up and read it really quickly. You go to CVD line in the settings, show CVD line overlay main chart. That's the toggle. I will say this too. We're going to look at one more thing on order flow. Let's go over the order flow of both the highs and the lows. The last live stream I did, I was explaining why I was hedge shorting up at the highs. There's a technical reason. This is important, I just realized, because I don't think I actually have covered this. But what do we see at the highs? Well, we see all the aggressive longs coming in, right? 28.6 million positive delta on this initial impulse. These are 5-minute candles, 10.6 million. These are shorts getting stopped out initially. 22.7 million on an increase in open interest. You don't see anything like this at the lows. I mean, this is just pure FOMO. All-time highs are coming, which was my thesis from lower, front-running the all-time highs. And so then I'm seeing what I want to see in order flow. 3.8 million, 9.2 million, 2.7, 8.5. And obviously people start getting wrecked here. But then even as we start ranging locally, we start forming bearish divergences in CVD and price. As more aggressive longs are coming in this range, CVD is making a relatively higher high, price is making lower highs, and we just start breaking down into this level. So, I mean, again, it's just, you see the people aggressively longing this, reacting to this move, getting absorbed by limit sellers and limit shorters, the bigger traders getting wrecked. Not that big traders don't trade this way. I mean, 22 million longs on, that's $22 million in longs. That's pretty decent in a 5-minute candle. And we did start to see aggressive selling in this range, but ultimately we ended up with a quick liquidity grab into the lows, and we can see here 50 million volume, 46 million volume, these 5-minute candles at lows, 11.2 million, 17.4 million positive delta. So that last stop hunt before price starts moving up into the highs here. You could argue a little bit of, it's not a bearish divergence technically because we made a new high, but these are signs of bearish absorption locally here. CVD making a higher high, price making a lower high. We did push up, but then you could call this just a lack of participants or something. I would say locally, there's nothing maybe major here, but probably leans a little bit more bearish locally as we're at resistance here. From an order flow perspective, then it would lean to me bullish. Bullish would be, we see a huge flush here and CVD makes a new low to this relative to this low. That'd be very bullish, or that could happen locally. But anyways, I personally would not be longing into this locally. I'd be waiting for lower. Somebody asking, what do you think about Astrology and GAN systems for trading? I think it's hard to argue against something interesting in terms of astrology and moon cycles. We can actually, I haven't looked at it in a while. Let me pull up the moon phases indicator here. And it is shockingly relevant. For anyone who hasn't seen this, you'll probably find this interesting. It's just moon phases here. So let's look at the, let's just go back to some of these moon phase shifts here. Don't always get one, obviously. But again, just kind of quite a clean. The consistency is actually quite nice, and it's kind of interesting for pivots on these moon cycles. I've heard I've heard different like theories, or maybe I invented these. I can't remember if I heard them or just invented them, but that you know, somehow humans' emotions are connected to, like, I think I've heard explanations that are more logical, which is like whether it's lighter or darker out, but like crime seems to move with moon cycles and things like that, and who knows, whatever the theory would be, but that it's whatever, however we're emotionally impacted by the moon cycles, that plays out on the charts. Who knows if that's true? I do not use moon cycles, but it is, I think, undeniably interesting. The consistency with which pivots will come in on these general time frames, including this high. But yeah, I do not think there's a strong argument here that this isn't more likely to end in a move through the all-time highs. I don't think there's a strong argument that we reject without taking the all-time highs for a major rejection. I think there's a decent argument that we reject from this region and see much lower, depending on how we get there locally, and we do something like this, and that would be an expanded flat idea, even all the way down into the 50K region would be possible from a technical perspective. My bias is probably getting more and more bullish for reasons that I think are not FOMO. I think they're data driven for a bigger move through the high, so I'm open to that. But of course, I'd like to be positioned long coming into this level, rather than, although there could be some nice long setups here depending on how all that develops. But anyways, I'm open to both. Open to a big rejection, open to a bigger move through the all-time highs, and I'm hoping it'll become very clear. And I'll say this, if we start getting something like this, I'm going to start trading this, looking for local technical setups all the way to 200K until some of that structure starts breaking down. But I think actually that will be kind of fun to trade, and it'll be interesting to see what type of what all the aggressive traders are doing. I wouldn't be surprised to just see that entire move shorted to oblivion, and people and tons of shorts to build up, low leverage shorts, 2x shorts to build up in this region, and only to all get blasted by a literal 100% move into 200K. I'm just kind of imagining these things, because I could see that being how people approach a move like that. But again, we got some levels up here to contend with first. Not worth thinking about too much. But especially with the Bitcoin dominance chart looking like this, there's a lot of things. Bitcoin dominance, order flow, technicals, just getting more and more open to that bigger move. Someone says, is it too early to hedge short Bitcoin? I mean, I'm not interested in shorting here. but obviously I don't know what's going to happen. I'm just trading more significant levels in my view, more significant retracements, more interested in that, like maybe some hedges up here. But price could reject here. I mean, who knows? I'm just not interested in shorting it. Yeah, so maybe I'll look through the comments one more time here. I just wanted to hop on. I haven't been on a live in a few days. But I think we've been crushing this price action. It's been pretty awesome. Price came a little lower yesterday, and you know, my last update in the Discord last night was a bit of a bumpy start to the long in this region. Price came lower, but we're moving now. I'm gonna have to go to sleep soon. That was last night. I'm a little less interested in the local short setup on the GP after the deeper sweep. That's what I said yesterday. So that is the region of price we're at now, and I am a little less interested in that short setup. But I have shared that I'd be maybe interested in this short setup higher. Well, we can have catalysts around news events. Somebody's asking, can you share why you don't look at news like CPI, FOMC? Is it just noise? But I'll often ask questions. Like people ask me, for example, about the halving. Like, you know, how do you take the halving into account? And I'm not denying that some of these events can be catalysts for volatility because people trade around them. But my question would be, because somebody responded and said, I said I'm not very interested in the halving. I have more reliable tools at my disposal for forming my thesis, my trade setups, my invalidation, and they said that they're very interested. Teach their own. They're very interested in the halving. It's very important to them. And then I asked, could you explain in what way it's important? Like, what trade are you putting on? Where are you entering? Where's your invalidation? Where are your targets because of the halving? What is the trade thesis how is it helping you take a trade? And there's just no response. And so I'm not saying that people don't have those types of thesis, but oftentimes it's like, oh, but you know, what about CPI? What about the inflation? Okay, what's your trade thesis? How is it helping you take a trade? Where are you entering? Where's your target? Where's your invalidation? Well, it doesn't give me an entry. It doesn't give me a target. It doesn't give me invalidation. Then how is it useful? What are you supposed to do with that? Yes, those events can create liquidity, volatility, and catalyst for price to move towards technical targets, and I don't deny that. But how does it give me a trade? And so if it's unclear how it's actionable and in what way it's actionable, other than say I'm interested in shorts or longs at a technical level, right? So say I'm interested in a long down here, for example. This was the major GP of this move, and there's a big news event that's coming out, and price is here. I might say, oh, this could be a catalyst for some volatility to push down into that level or something like that, right? But I'm not going to say, oh, depending on my interpretation of the news event, I was going to long here, but now I'm going to short. Or, you know, I think we'll see lower, or this level's not relevant because of this news event. I think that gets really hard and really arbitrary quickly. So that's my view on news. I'm not saying people don't have thesis on news events that maybe make sense and that give them entries and invalidation and targets, but it's a tall order. I'd rather use other tools. And maybe some people here have comments that kind of counter that thesis, right? Someone's saying, can you please talk about your low time frame setup again, please, on Bitcoin? Yeah, I mean, obviously people are gonna, especially if you don't have any longs, be interested in those. I'm kind of, I have some different. I wouldn't mind the idea of a range forming here, basically. Um, just from a liquidity perspective, like a choppy range can be quite nice. I'm thinking about what are some ideas that look like a range could form to me. And if we are in a flat, you know, we have A, B, C, A, B. We're forming the wave A inside of our wave C. We have a wave B. We have a wave C. Just play it over a while. And so right now, internally, maybe we have a flat here, which would just be a range. So this would look maybe something like this, where the internals of this would be like an A, B, C of the lower degree. So for local setups, well, I'd be interested in maybe something like this. We have a few ideas and levels here. Come back down and retest these lows. It's also just a sweep retest idea as well. And trade that up to the highs, and this is why I'd be interested in shorts. We form a range just right up against these highs, maybe wick through them a little bit, come back down, retest the lows, come back up, all-time highs, come back down, retest this low. And I don't dislike that people are going to get wrecked in this. There's going to be more opportunities for bigger traders to absorb all this selling into this range before a bigger move to the upside. So locally, I'd just be looking for a higher low off of this move. You know, that's not an uncommon idea. Let's get rid of Elliot Wave. That's not an uncommon idea in local uptrends, right? You have the initial move. Price has an initial impulse, puts in a higher low, and then continues up. And we have some nice confluence around these levels for that low to come in. I wouldn't personally be looking, I wouldn't lean towards it being the most likely that we take this low again, although this is an important level. So it's an important liquidity level. So my quote unquote prediction of local price action could be completely wrong, but I think it's justifiable to be interested in longs locally here. But yeah. Also would be looking at order flow here. I wouldn't be surprised to see the majority of these longs wiped out on a move like this. The aggressive longs coming in here. A little bit of bearish absorption up at the highs. So that looks quite nice to me. Just about being patient though. If price just goes higher here, well, I would just form a new, if I want to take local longs, I'd just wait for some new local setups. Krish is saying, we know you have an upside target of 77K, but what ideas do you have on a retrace to 45 to 50K before the bigger move to 100K? Well, that actually has been my primary thesis for a long time. So we can kind of go to how this all ends, which is this. If we reject from 77K, the 50K scenario would be a big expanded flat here into these lows, which there's a lot of confluence here, and obviously it doesn't take a genius to realize how much liquidity there's going to be coming and retesting this impulse low. Structurally, I love this idea, and I think it almost looks more likely structurally than the bigger move to the upside. There's just there's just some really bullish ideas that are sort of counter to that. But let me get rid of this. So, and what I mean by it's been my primary thesis, and I'm still very much considering it, is that, let me go here. I've talked about this before, but even at 73K, I had this idea for the flat drawn out back down to 50K, the 1.237, but looking for the wave A. I gave some different ideas here. But I've talked about it as my primary thesis even since here, right? So when we're putting our 73K high, this is a month ago, looking for this, looking for the wave B up to the 77K, and then the move down into the 50K region before the bigger move to the upside. And I'm still interested in all of this here, but I'm looking for reasonable reasons to consider getting more bullish out of this. And so it's sort of like, this is how I would approach it personally. I might be interested in shorts here, depending on how price progresses. I'm probably going to be interested in taking profits on my long. But I don't just have a thesis where we reject from a breakout of all-time highs straight to 50K. I have to have a thesis for how am I going to behave and treat my positions if we just start breaking through all of this structure. I'm not going to mindlessly just start shorting everything every time price goes up, thinking, oh, we're just going a little higher. We're going to come down to 50K. And I'm not just going to blindly close all my longs. What is the idea for price going much, much higher? So I think this is going to be a critical area on the chart. And it's just obviously, I love the idea of price coming down through all these lows from a liquidity perspective, and I think this would just offer such a great opportunity for a swing long at 50K. But just because I would love that doesn't mean it's going to be my only thesis, and it may not even be my primary thesis for very long, depending on what happens up here. Yeah, but so let's think about liquidity for a second. Chris, you're saying exactly lucky correlates to my idea that there's a bunch of liquidity down there. Of course, there is. The idea of liquidity, like breaking into liquidity, is that at some point, what could be happening here is nobody wants to sell, everyone wants to buy, but all the people who want to buy are done buying. And all the people who want to sell or short are done. They've taken the other side of all the buying pressure. So maybe there's aggressive buying pressure up here. And then if nobody wants to buy and nobody wants to sell, well, where would people want to sell? Down here, right? If nobody wants to buy, where would people want to buy? Up here. And so all these people who've been buying are going to sell for a move down to liquidity, and it generates forced selling. But we actually haven't been seeing that really in the order flow. We've been seeing actually the opposite, which is, well, there's between limit buyers and market sellers, which is people have wanted to aggressively sell into this whole range. And what you might have expected to see is that throughout this whole range, there was aggressive buying. Everyone wants to buy. Prices almost coming to all-time highs, and getting absorbed. So just aggressive buying, limit selling, limit shorting, and then everyone gets wrecked. But instead, what we've actually seen is everyone's thinking price is going lower, you would assume, or they wouldn't be aggressively selling throughout this whole range. And so maybe the liquidity has already been grabbed just by the fact it's kind of like here, right? We had this big impulse to the upside, and then we have a range here. Oh yeah, there's going to be a lot of liquidity under this, and we could come down and grab it, but everything just gets absorbed. and there actually is aggressive selling already, and it just gets absorbed. And so the liquidity, in a sense, has been grabbed because people just offered up that liquidity in this range. And so similar things here on a low time frame as well. You know, we could come take all these lows for liquidity, but everybody wanted to sell into this anyways. And we had big bullish divergences form. And so, yeah, the point is all the selling liquidity is sort of being tapped on this medium higher time frame at the highs here, just by the fact that people are already selling into this whole range. So that would be the counter argument to that the liquidity is actually taken already, because people are just assuming that big flush is coming, and a lot of people are going to want to sell up to at all-time highs, just saying I'm going to buy back when we eventually do just flush to 50K, which may come, but that could be the logic for just selling up here, even though price is quite bullish, uptrends are holding, all this sort of thing. People are just selling, saying I'll buy back when we have the flush, and then we never get the flush. Price goes higher. They might even short into this, and eventually they find themselves longing way up here in disbelief. Somebody says, hey, Lucky, I'm a member of your Discord as of last week, and it's extremely helpful. Do you have a plan? Do you have or plan to provide educational content on Elliot Wave theory? There's educational references, and to X-Force Global, who I think has great material for Elliot Wave, and then reading Prechter and Frost's book. I mean, I think that's kind of a must. I would say X-Force Global's content is essentially and it should be like a direct copy of the book in terms of concepts, but using Bitcoin. So you can go to his Twitter, and he has a series on it. But the point is, the resources are pretty established for Elliot Wave, and so for example, it would kind of be like me. There being physics, and somebody saying, "Oh, instead of reading this this book on this theory in physics, I'm just going to write another book with my own take on physics." But the resources are there, so and there's pretty much established must-use resources. So. And it would be, I mean, it's a pretty dense topic. So just prepare that you're looking at probably years and years and years of pretty studious efforts in studying Elliot Wave. But I think even if you're not using it directly, and I think for most people they probably shouldn't, and oftentimes I'm not actually using Elliot Wave ideas as my primary trade triggers and thesis. I'm using simpler structures and liquidity ideas and order flow ideas, and using it more as like a frame of reference for myself. But the point is that even if you're not using it directly in your trading, and when you're first learning it, you certainly should not be. It's so interesting that I think it's can be just interesting to study, to even just to understand the market a little more. Someone's saying, where would be invalidation on your 77K longs? I don't know. I mean, I'd have to see some of this structure start breaking down. These are longs that are building from lower, and I'm adding to them. And so, I mean, I'd like to have some hedge shorts if we come and retest these levels at the time to relieve some of that pressure off those longs. And I don't think it's unreasonable that we could come retest these lows. But, I mean, breaking down the bullish structure here needs to be a big warning sign. And I wouldn't like to stop out a bunch of these longs at something like break even. I don't think there's anything wrong with taking some profits off of them, though, and re-entering on a retest and things like that. But I would say breaking down all of this structure I'm going to be interested in hedge shorting up at the highs, like I said, to protect my longs. But here's something that's super important. So you're saying, where's my invalidation for my longs? And invalidation, if say I say, oh, my invalidation is losing these lows. Let's just say that's my invalidation. Where somebody will say, okay, that means price won't go under those lows. I'm going to long here with my liquidation or stop under these lows. That's not what how invalidation should be used, right? There's a big difference. I mean, you all could understand this no matter your level of trading. Being long from support looking for higher, and being long from support looking for higher, and longing here because you're looking for higher and not longing support. The risk reward, the asymmetric risk reward here is much better, and you're not relying on price going straight up from the impulse. You're longing, expecting the move up for technical reasons, but trying to time the move with the breakout here. I mean, how many people got wrecked here, right? Expecting all-time highs in this whole range, wrecked locally, wrecked at the highs, super aggressive longs coming in, only to have the big move from 71K to 64K. And I'll just say this, I mean, you know, people are so, I don't know if I come across as arrogant, but people are so arrogant. When I was shorting here, every day, all my comments were just like coming back to my posts, have fun getting stopped out, you're going to get wrecked, you're such an idiot. Every time price went up at all here, liquidation incoming. I mean, so I mean, what does that tell me when I get those comments? When sometimes there's a lot of emotion in ideas you share, and the emotion in the comments is like very, very vitriolic. But it also tells me that people are just in their heads, price is going up. I mean, it's confirmed. To think that we're not about to blast our all-time highs is crazy. This guy's an idiot. He's a fool. And so I know, and I see it in the order flow. People are aggressively longing these highs. And so, anyways, it's just kind of interesting how the types of emotion that you see in price action and order flow and aggressive longs actually does get reflected in your comments, and people actually get angry at any idea that suggests that price could go down. And to them, it's impossible. It's impossible. So that's a dangerous mindset to be in. But I actually do like sharing some of those ideas on Twitter for that reason, just to get a sense of how crazy people think an idea is, that I think is certainly not certain, but somewhat reasonably probable that there would be something to look out for. And sometimes people are like, oh, that's interesting. You know, sometimes there's zero hate, and sometimes it's just endless hate, which doesn't bother me personally. I think it's kind of funny. And I sometimes, you know, banter back and forth about it, but it doesn't really bother me. I understand the concept of it, but it's a dangerous mindset to have, that there's no way X will happen. We're definitely doing this. This can't happen. I mean, I even got comments about that on this triangle. I got a comment from somebody saying, because I had it drawn a little bit differently, but basically saying I'm looking for something like this, right? The retest of this previous low. We came a little lower. But he said that can't happen. You can't have essentially this price action on a triangle breakout. And this was up here. of course, I only have this triangle drawn just to show that I'm just showing what other people are looking at and how this price action is going to just wreck everybody trading this triangle breakout. And I don't think it's relevant at all. I don't think it's a relevant structure. I just think it's a structure everyone's watching and they're going to get wrecked trading it. But in somebody's view, me drawing this out on a chart, that can't happen. That's not how triangles work. So it's just kind of interesting. But yeah, I mean, there's always going to be somebody to, you know, I'm never going to be right 100%. And I wouldn't even say, you know, ultimately, although I'm long and my idea of like price bouncing off here, we came and took the low. But you could just say I wasn't 100% right here. Price came lower. I mean, there was still key support there. But it is funny. I mean, as soon as price came down below this low, I got my first comment of somebody going back to an old post, because price had gone, you know, 1% lower. But so there's always going to be someone to tell you you're an idiot, you're stupid, you're wrong, and you those opinions can't matter, right? In fact, when I share ideas and everybody likes them, I start getting a little bit suspicious of the idea. Someone says, "Hey, Lucky, open interest looks high now, and the perps premium also is going up. Do you think we have enough at this level to go from 71 to 74, 77K?" Yeah, it's not very far away. I mean, do we have enough? 74K from current price is 4% away. From current price, 77K is 8% away. But we might not. I mean, here's the thing. Let's just simplify the decision-making process of trading. I set this up at the highs when I was taking this short. You have a few options here. And it could be simplified into no trade, sitting on your hands, no trade, or putting on risk. Okay, so you have two options here. You either put on risk or you sit on your hands. What kind of risk do you want to put on here? Short risk or long risk? For me, I wouldn't take a long here into all these aggressive FOMO longs. So I have two decisions: sit on my hands or take a short. I think it's compelling enough to take a short. Does that mean price has to go down? No, I have invalidation. I can hold that short. I have reasons to hold that short, and I'm going to put on that risk. So whether or not price has enough juice or whatever, however you want to define it, to go up to these highs, well, I have two choices down here. I can put on no risk, sit on my hands, or I can put on risk. If I'm going to put on risk, am I going to be putting on short risk or long risk? I'm going to put on long risk, and I can have invalidation for that. And so it's just a series of that decision-making process. When price is down here, I have two decisions. Is there a compelling enough reason to put on risk, or should I sit on my hands? I think there's a compelling enough reason to put on risk. What is the compelling reason? Well, at the time, I went over all those reasons, right? Obviously, major fib retracements, taking this weekly low. I made a video on it on X. And so I decided to put on the risk. Does that mean that price has to go up? No, it means I might take a stop. And so I think there's compelling reasons, compelling enough to put on some risk, that price is going to push up through all-time highs. Or I could just sit on my hands. I wouldn't short this personally, but so that's how you could simplify. Is there enough? And then you manage the risk. And so that's kind of the decision-making process. And you use, in my view, a great tool is all the technical tools, order flow tools, all these things to fine tune where you're going to put on that risk, what and where you're going to pull off that risk. Someone says, you come across as far from arrogant, sir. Thank you for your very interesting stream. At first, when I started reading that, I'd read it as you come across as very arrogant, sir, which to some I may, right? Especially on Twitter. But I appreciate that. All right, well, we've kind of hung out here. That's kind of what I wanted to do, hang out, share some of my thoughts. Like right now for me is just sort of a sit on my hands situation locally. You don't need to trade every single candle. So I still think the more interesting idea is adding to longs, a bit of a region here. And I'd be kind of interested in the idea I shared earlier. So that's what I'm going to be looking for. Of course, this may come as a shock to some. Depending on what happens, everything changes. That's the idea of having a thesis. A thesis should have, like, the big question would be this. Let's just say that you give yourself some room to, some margin of error. That would be the difference between your entry and where you close your trade at a loss, your stop loss, your invalidation. So you give yourself some room for error. But you've entered a long because you think price is going to go up. And you give yourself some margin for error. But at some point, something has to happen where you think, oh, I don't actually think it's so, I'm not so confident. If I was long because I thought price was going to go up and now price is going down, at what point am I just accepting that I'm wrong? And so let's just say, like, this is going to be a conundrum that a lot of breakout traders find themselves in. All the people longing up here, aggressive longs. Well, at what point are they starting to think, oh, we're not breaking out? Because you could take a breakout long here. You should have some invalidation for it. And a lot of people are going to get wrecked and liquidated by this move to the downside that longed up at the highs. The same thing happens here, right? At some point, well, you longed because you thought price was going up. You can give yourself a little bit of a margin of error, but price isn't going up. So at some point, you have to question, why am I in this trade? And just cut it and reassess the entire idea. And that could happen to me with my bullish thesis. For me, I thought this was a critical idea, this low, but I didn't think it invalidated coming and sweeping these lows, the long thesis. So I'm open to staying objective and saying, okay, well, I can be open to price. That price could break down here and we could have a much bigger move to the downside. And I may have to cut this long. And for me, I would just cut it. If we start breaking the lows, cut my long positions, because I can always get back in. I can reassess. I can say, well, I don't want to be long if price just liquidates like this through all these lows. And so I just cut it. And if price just wicks the lows and then reclaims it, I can just open that trade again. So that's how I would approach some of that. Just accepting that, you know, you may have to reassess your ideas, and sometimes that means closing a trade at break even, slight profits, a slight loss, and just letting some price action play out. And then if structure's holding up, you have some more confidence locally in that being the case, then you could just re-enter your position. But never wanting to sit, say you're, well, where do you think the majority of all these shorts started getting liquidated? From down lower? Way up here, right? So there's going to be a lot of people who are shorting into all of this structure, even shorting these impulses, getting liquidated on all of these impulses, and having no invalidation for their short. Just thinking, price will never come up here. But if you're short down here for a breakdown, to never have the idea of getting out of that trade through all of this, if you're short, you're expecting price to go down. Give yourself a little bit of a margin of error, but yeah. So anyways, a little room for error. Couple things here, and then I'll end the live stream. So someone says, excluding 77K retracement of 1.236, how likely do you think it is will be at the 1.13 or 1.382? I don't know. There's a part of me that's just like, some of these ideas can be assessed when price gets there. So there, because we're gonna have way more information. We're gonna know if price just went straight up through this level to 100K. We're gonna have order flow information, and what at some point I can have the technical general idea for the trade, basing my longs off of these targets. But I also have the luxury, and we all do, that I can just come and look at the data and the chart at the time. So why spend too much time thinking about like, oh, could we come up to the 1.132? Could we come up to this 1.236? You know, because this is the question, right? Like, how likely do I think it could be that we come in around, I'm sure it's around like 75.5K or something, 77K, 78K. Let's just see what happens up there. I think that's going to be a better time to make decisions. Someone says, hey, Lucky, I do have a long from 68.9. Do you think it's smart if I close it now and re-enter lower? I mean, not necessarily, because price, well, let's put it this way. You close it now and you're waiting for price to come down lower. What do you do if price goes up? All right, so it could be smart. It could be smart if you have a thesis. If you're trading that long into 77K, I don't know where your invalidation is. Like maybe it's under this low. I think this is a reasonable setup. For example, say you're 68.9, you said. So you're here 68.9, and maybe this is your long, right? Okay, well, nothing wrong with letting that long just play out. But if you start getting into the idea of, oh, I'm going to close it now and wait for the retracement, I'd be interested in longing here, but doesn't mean I'd be interested in closing on my longs for this retracement. And so what do you do if this starts happening? Well, then you say, well, I'll just wait for the retracement. And then this happens and you say, oh shit, I closed my swing long before, and then you end up longing the high, and maybe you don't have a stop loss, and so in that case it wouldn't be so smart. Yeah, I would just say that, like, if it depends on the thesis of your trade, but if you start making low time frame decisions based on high time frame ideas, it's like scalping, right? You're scalping a swing trade potentially. So price may come back down to retest the lows, may not, depends on the thesis. But for example, like, you could easily just find yourself in that position all the time. You take this long, price comes up to this range highs, and you say, you know what, we're retesting this, I'm going to close all my longs and I'm going to wait for a retest of this level, and then I'll get back in my swing longs. Then price just goes straight up, and you say, okay, well, I'm going to just wait for a retest into this level, and you end up FOMOing in because you realize you missed the entire move because you're trying to trade the low time frame with your swing position. So it just depends. Yeah, so you said that's your setup. Well, again, maybe this setup isn't a high time frame setup. Maybe you want to take profits, but I just say there's a reasonable case for both, right? Taking some profits, trying to add back, nothing wrong in my view about the idea of holding that setup and just accepting the risk in that trade until some of the deeper targets. But anyways, all right, well, maybe I'll end the live stream here. We did a lot of chatting. ETH rejecting from the middle of the range, more or less. I actually pulled perfectly clean here. I'm pulling it to this wick. And the 618 locally. Bitcoin probably at some local resistance, a little bit of local bearish absorption forming, nothing major. And I'm just going to keep trading towards the all-time high ideas, but very open to that range forming. So anyways, chat to you guys later.